And I really was ready to throw in the towel on capital raising and my business altogether because I thought I wasn't going to survive.
What does capitalism say? The sole purpose of a business is to make money.
That's a really great way to describe it, is that accounting looks at history and finance looks at the future.
Tighten your belt, watch your consumer spending, buy your $8 eggs, and things will at some point get better.
There's so many different avenues that you can take, even with accounting. I never thought accounting could be loads of fun and that I could be having so much fun with accounting, but
All right, kids, we're rolling. Today we have another financial expert here because, that's what we all need, more financial advice, especially me. So Irina and I actually go way back. I used to give her rides back in high school whenever it snowed in Chicago, and her and another friend didn't have a ride, and I think they were younger, and I had a car. So we used to drive to high school all the time. And then, like the rest of our high school crew, everybody kind of went their own separate ways, and different things happened to different people. And we all sort of loosely kept in touch throughout the years. And, 25 years later, here we are again. And so, with that said, how'd you get into accounting? Because, a lot of Russians seem to end up in accounting and finance, and you're one of them.
yeah, it was that whole Russian thing at DePaul, because I ended up going to DePaul, and everybody was going into accounting or finance. I went into finance just because everybody else was going into finance. Really, like I started to learn about it more and I like the math part about it. I was always into math and stuff, and so uh, that's how I got into finance. I wanted to minor in accounting once. It was like one of the hardest classes that I took. So I decided to just drop out of the minor of accounting, and I stuck to finance all my college career.
And it was finance specifically, or was it accounting? Because those are two different kind of trajectories.
Right. So it was finance.
Okay.
It was strictly finance. So I took like economics. I had to take an accounting class. Like you had to take one or two accounting classes. Then like you had to take real estate finance. So anything that dealt with finance, learning about stocks and trade, and like I said, you did have to take parts of accounting, but not all of it. And then right now you'll find, like if you go into a corporation and you go work as a financial analyst, which is what I did for many, many years. I was doing a lot of accounting work. I was actually considered an accountant by trade, but my title was financial analyst. So I don't know, everybody's got their own agenda.
Yeah, I think it's kind of worth diving into because my son is actually doing accounting now, and he's at the University of Tampa, and he started with finance, and I think about half a year in, he took a couple of accounting classes, and he's like, it's much easier to me to do accounting, and I like it more, and so he's in the process of switching to accounting from finance. But a good analogy I've heard about the difference between the two is accounting looks backwards and finance looks forwards. So that's kind of the difference between an accountant and a CFO, for example, right? Because the accounting looks at the numbers and sort of tells you how you got here or where you are. And finance, or the CFO side, looks at the numbers and tells you, well, here's where we can go and here's where we should go. And so maybe define the difference between the two, because I think a lot of times they kind of get convoluted together, because I know there's the stock market side and the investment side, and then there's like the actual CPA and accounting side, and it's all numbers, so people kind of think of them as similar, but I think they're completely different.
Yeah, and that's a really great way to describe it, is that accounting looks at history and finance looks at the future.
Mm,
That's one way to look at it. I think that accountants still are responsible for things like the budget and the forecast, which looks at future numbers, and you will find that a lot of accountants are responsible for those types of things within organizations. Now, it depends where you're working. Are you working like for the big, you know, four, which is like your um,
KPMGs and all of those, Deloitte's.
PhDs,
Yeah.
Deloitte, all of that? Like there, you would be responsible for a lot more of like, are you doing the audit part of accounting? Are you doing the reconciliation part of an audit? Are you doing the forecasting, which would be considered financial accounting?
Mm,
So it really just depends on where you work. Like if you work for a manufacturing company and your title is accountant, let's say, a lot of times you'll find that accountant is running forecasts, and
mm.
he or she is still looking at future numbers because that responsibility just happens to fall on them. It just depends on what your future outlook is, like where do you want to work specifically, and what your responsibilities are going to look like at that organization.
Yeah, is that more kind of temperamentally aligned? Because I find that accounting is more conservative, and finance seems to be more risk. Because like if you go into investing, for example, the personality that you need to be a stockbroker, for instance, or a trader, like day traders especially, options and all those things, you kind of have to be somewhat on the risky side and make some bets. While the accounting side is more conservative because you're always advising the owners of the company to, well, don't invest too crazy into inventory because there's always tough times ahead. And so I think that you're sort of almost temperamentally falling into one versus the other.
And that could be true. I mean, if you look at a lot of the mom and pop CPAs that have been around for 30, 40 years, you'll find that they're probably a little bit more conservative. And I probably wouldn't want to go to them for stock trade advice. I would go to like a bank maybe, or, like a broker or something like that.
Hmm.
So it really depends. Like the older CPAs who've been around, like I said, for a while, they're a little bit more conservative, I would say. So, but like me, like I was an accountant for many years. I had a title accountant, but I'm still, as a CFO, I still call myself accountant many times in front of customers and just people in general. But you know, I do the analysis. Like I'm always part of, the one that puts together the Excel spreadsheet for a forecast for a
Hmm.
client. Or, I'm not always the one who's categorizing the expenses and revenues in QuickBooks, for example, which is what we work on mostly. So it depends on what type of structure the organization is, and I'm not a CPA. That's the other thing.
Hmm.
Like I practiced accounting for many years without a CPA, and I still practice accounting without a CPA because I'll get my PIN, for example, to do tax returns. But even now, I don't do tax returns because my
Hmm.
employees do the tax returns. So it just depends on what the organization is kind of set up like, and where you fall on that tree.
Does it matter, the CPA thing? Because I know a lot of people go into getting, I think it's 2 years, right? Extra CPA. I guess it depends on the person and the program. But can you make as much money? I guess I don't know if that's even the right question, because I guess, well, what are people chasing with extra credentials? Is it more money? I'm always curious of the end goal of people, right? It's like what's the reason people do something, and so people that try to get the MBA, it's probably not because they like learning, especially in an educationally controlled environment. It's because they want to increase their credentials in order to have a better, more paying job, for example. And so I imagine CPA and any other sort of structural education that adds to your licensure or the letters behind your name, those are always reasons to the gold rather than fully encompassing pursuits of their own.
Yeah, no, I could see why a CPA designation doesn't hurt. Let's put it this way. I mean, it's definitely one of those things that if you're a regular accountant and you want to go into financial accounting and you want to be like a VP of accounting or director of accounting, and the company that you work for you know, won't move you up until you get your CPA. Like a lot of times that'll happen. A CFO actually, like if I go apply for a CFO job, a lot of those CFO jobs will ask for a CPA. Now,
Mm.
but it's really up to you if you want to take the test or not. It's a 4-part test. It could take 2 years. It could take 4 years if you pass. It's just one of those, like what you want to do with your career and what is the trajectory of your career and where it's going. Like if you need the CPA or not. Because I can still practice QuickBooks accounting without being a CPA, for example.
Okay. Is there a gap in knowledge between having a CPA and not having a CPA, or do you not feel that not having a CPA doesn't take anything away from your abilities?
Well, let's put it this way. Like, if you remember studying for a test, a really hard test at school, do you actually ever remember any of the stuff that you studied for?
Very little.
Yeah, so that's how I look at it. You take it, you get the designation, and then you're like, you're a CPA. Okay, great.
Hmm.
For me, it's like I still do the CPE credit. Like I go and through Intuit and other accounting providers, I go and I sit through classes of like webinars and like updates on and different accounting rules and things that I should know for tax season and whatnot. But it doesn't necessarily mean that like it's the end all.
Right.
Like I got the CPE credits, same thing, but you have to stay up to date with CPA because the CPE credits, I don't have to get them signed, but you, as a CPA, you have to because you
Hmm.
have to stay um, uh,
Continued education, basically.
active with your CPA. Yeah.
Yeah. Yeah. Interesting. Because I'm always for practical knowledge. I've never really been like the school person. Only because it's exactly like you said. Whenever you do a test, like what the hell do you remember from that test? However, you pass it and you get a grade and you get a degree and you get a diploma, and then now everybody looks at your resume and it's got the 3 letters or whatever behind it, or the 2 letters. Um, but that's not really an indication of your competence or abilities, because having years of actual practice on the ground level, kind of like what you're describing you have, is more valuable to me at least than any credentials.
Yeah, I mean, and for me, for example, I why I don't need a CPA is because like my employees are responsible for a lot of the accounting and um the transactions that happen in accounting. Like a lot, my employees are responsible for it. So like I my overall business is certified and like I can be in business, but I all I need is the PTIN to do taxes. Like
Mm-hmm.
essentially, like I don't need to be a CPA to talk to a client and market to a client that we can help clean up your QuickBooks. We can, categorize all your expenses and revenues. I'm QuickBooks Pro certified, so I can work in QuickBooks as a certified person. Um, but I don't necessarily need a CPA to do those things. So I just, for me, it's
You can
like
hire
a waste.
somebody.
Yeah.
Yeah, it's funny because that's nobody tells you that in school or as you're growing up. Um, there's always like a difference between people who study and then people who like skip school and learn through practical applications what it is, the path is. And what's more interesting is that typically speaking, I've seen that those people that end up skipping school and kind of doing their own thing end up running businesses that then hire those people who end up becoming, the ones with the degrees and stuff. It's kind of like you don't have to be a doctor to run a medical practice. You can basically just be an entrepreneur and then run a medical practice and hire doctors. I mean, it obviously helps if you're the doctor, and like your doctor can come in, and so you can always step in, but it's not necessary. You can essentially be a CFO and have multiple CPAs under your company that you then hire out at a higher rate and pay them their salary.
Yeah, absolutely. I think it just, like I keep saying, it depends on the type of business you own, and what you're trying to do. I mean, there's so many different avenues that you can take, even with accounting. I never thought accounting could be loads of fun and that I could be having so much fun with accounting.
Mm-hmm.
But, like even without a CPA, practicing accounting is possible. And, I don't do audits. If I do an audit, I've done an audit where I brought a CPA employee, a CPA advisor. He happened to be a CPA, I wasn't. We did an audit together, like those types of things, like, like there's ways around it, right? Like I got a really nice package audit customer and I had to find a CPA and I did, and we worked together and we completed the audit.
Hmm. So what do you actually do now? Now that we're past the definition of what accounting and finance is, because it sounds like you run a firm, and I know your title says CFO. It says fractional CFO actually. So you're kind of a firm or an individual with other subcontractors or employees under you that other companies hire out when they don't have a CFO, right?
Yeah, so I'm a fractional CFO. I work with smaller businesses, typically smaller. Some businesses are like large businesses, like 50 million. I have a $50 million,
Mm-hmm.
but a lot of the smaller businesses I work with, I call myself a fractional CFO because I don't, you don't hire me as a full-time CFO and pay me, $500,000 a year like regular CFO does.
Mm-hmm.
Like you hire me at a fractional level, like my average clients who have me work in their QuickBooks or have me come into their office and do, like I had to do a commission sales report for a customer. I had to come in and he has a proprietary software, so I couldn't use like a QuickBooks where I could log in remotely. But like sometimes I will have to come into an office and do like accounting work. And those usually are like doing metrics, doing a forecast, like
Mm-hmm.
commissions report. Like I call me a consultant. Like I'm a fractional CFO, but I'm a consultant because I'll come in and I'll take a look at your books and I'll tell you, where you're spending too much, how you can save money in taxes, how you can save money on your spend, where your balance sheet looks funny. Like a lot of times, like real estate investors, for example, they'll separate each property and they'll have like 30 properties on one balance sheet. Now at that point you want to create like a holdings company and put like a lot of your companies in that holdings company. Stuff like that. It's just reviewing where the company is financially and suggesting where they can improve or make changes so that they're
Mm-hmm.
more efficient, that they're saving money, that they look more presentable, like, on their balance sheet and income statement and things like that.
Yeah. Yeah. Okay. And so from a business perspective, and I know because I've run multiple businesses at this point, and I've also heard a CEO of a company I used to work for way before say people usually make decisions on the business side for two reasons. It's to save money or to make money, right? And so, how would then um, a business owner justify bringing in, like you, for example, or another fractional CFO when they don't have one on the books? Because you can also, I guess, make an argument from a small business perspective that you're too small to have an accountant or CFO. Usually a lot of those things are handled by the owner because the owner does everything in a small business. And so it's like, when does that decision get made between not having anybody at all and making a decision to bring somebody in? Because it has to be like a financial decision in my mind.
Yeah, that's a really good question. I think it's a matter of when you've outgrown yourself. I mean, as a business owner, do you constantly want to spend, your 6 to 9 p.m. cleaning up your QuickBooks or adjusting your accounting books, whatever it is that you're using, and then going to bed thinking, did I make a mistake posting that entry? Like, am
Hmm.
I doing it right? Like, a lot of times we don't know if we're categorizing things correctly, or if it makes sense from a financial standpoint. Like, you kind of start to think that you need somebody to come in and organize your books for you because you're busy in the operations. That's how I see a CEO. A CEO is typically like majorly involved with operations of the business. He or she is the day to day of operations in the business, where they're either, if they're manufacturing something, they're running the factory, they're running all their supplies and creating their products, or whatever it is that they're doing on the back end. But then I also find that a lot of clients come to me on LinkedIn. Like, I have a page on LinkedIn, and people will say, "Hey, I need some accounting help," and
Hmm.
develop relationships that way. So I think a lot of CEOs just start to see it on their own that they need that support. Like, it comes to a point where they realize it, and they have come to me where they've reached out to me either on Facebook or LinkedIn, and we've developed a relationship and started talking and seeing what the best options are for them.
Hmm. Is there a gateway drug, meaning like the thing that basically gets them to you? It's kind of like, hey, I don't know how to make a commission report. And so the commission report is the gateway drug from not having anybody to like a fractional CFO. Or is it like a basic accounting side?
I think it's just a matter of having that, like, complete stranger that's never been in the organization, that's never seen how they perform, come in and run these numbers and give feedback, because he's more like, he knows how to do commissions reports, he knows how to run all those things. He hired me as an outside consultant to do it for him so that we can have that discussion of what to do about his spend, because he was like,
Hmm.
his company was spending too much money, he was losing a lot of money, and he needed this and sales report to see which salesperson was making how much money based on
Hmm.
commission and stuff like that. So, I think he knows. I think he either doesn't have time. Most CEOs, like, they just don't have time to sit there and like create commissions reports. I don't know, or they just want that outside advice, like somebody who is not part of the business, who's just like cleanly comes in and like looks at the business and tells you what your numbers look like, and that's just a better report for them.
So it's more advisory than anything. It's kind of like, I'm already doing all these things. How do I think about it all? Like, am I on the right track in terms of my decision making? Am I doing these reports correctly? Am I, after doing the reports, looking at the numbers and inferring the right things or not? Right?
Yeah, absolutely. Numbers tell a story. That's why accounting is more of a storytelling uh, area, whereas finance is more of a numbers telling area. because finance develops the metrics and the numbers that you look at, while accounting tells you a story of the numbers that you're looking at. So that's where financial accounting kind of meet, I think.
Interesting. One's a historical drama and the other one is science fiction.
Yeah, you could look at it that way. Yeah.
All right. Yeah.
No numbers are science fiction in finance. You have to; those are reality.
Correct. Yeah. Sometimes it's horror. Look.
Sometimes it's scary to look at. Yeah.
And so I guess there's a number, revenue wise, like a dollar amount that has that kind of border between not needing anybody and then seeking somebody's help. And I think that's maybe like single millions, right, in revenue. Is kind of when you start, because I think up until that point, as an owner, and again I've been there myself, like you're an owner slash gender, you're doing everything, you're reconciling yourself, and then you're also doing the operations, and then sometimes you're selling. But then at a certain point, growth has to kick in, and all of a sudden your time is taken by more important higher level tasks, and so like that reconciliation or the reporting has to go away.
Yeah, I see that happening. I see it happening at a much larger scale. I think multi-million, because I think single millions, I think that like people can still handle a lot of the accounting, and they might have like a bookkeeper on staff
Hmm.
that they keep like once a month comes in and does something. I think that once they get into multiple millions and once they start seeing a drop, like a lot of times, like a lot of my customers are the ones that are losing money. They see a
Hmm.
drop from like multi-million dollars back into single millions, and they're wondering what's going on, like within a month. Like, like their spend is like overspent. And that's one of the things that I do is I do cost management, spend management, and how do you control that area of the business so that you don't go from multi-million dollar revenue to singles in a matter of a month. So it just, again, it depends on the business and where they're at, and what the kind of the head of the company, what they think like.
It's very interesting because it's completely different across industries. Like real estate, for example, you mentioned you deal with a couple of companies that do real estate, and I've done product centric companies both on the consumer side and B2B, and so those are completely differently ran than like real estate investment firms, for example. And so each one kind of needs its own little acumen, let's put it that way. Like how can you have a broad enough knowledge base to be able to take care of all of them across the board?
That's a really good question. So I do deal with kind of a variety of customer base, and they keep adding on like from different businesses, like caretakers and all kinds of businesses. I tend to like try not to look at the industry, but what is my end goal? Like if I'm just doing taxes for them, then I'm not even going to worry about anything else that I see in their books. If I have access to their books, I'm just gonna, look at their P&L and adjust for what their expense deductions are, and get whatever else I need from them for taxes. If
Explain
I'm
what a P&L is. Sometimes people don't know what that is.
Yeah, yeah, sure. P&L is a profit and loss statement. It's the income statement. It's one of the financial statements that's used by CEOs and CFOs and owners of the company. It looks at your revenues minus your expenses, and it's basically your profit,
Hmm.
profit before taxes or anything else.
Cool.
So, I look at their number. Sometimes I only look at their profit and loss because I'm doing just taxes for them. But if we're talking about a company that I'm doing like spend management, like if we're looking at costs, then I'm going to be reviewing a lot of things like in their operations to see where the spend is too much, for example. A lot of times it's looking at resources. A lot of times it's looking at resources like employees. So I'm the consultant that nobody likes to see walk into their office, because I have walked into an office where after consulting with the CEO, we had to fire people,
Mm-hmm.
because that's where their major spend was, like after reviewing a lot of that. So, I mean, it depends on what my end goal is with the company. Um, but mostly I work in QuickBooks and just adjust for like a day to day activity in QuickBooks, like banking activity, as well as looking at your balance sheet to see if you're adjusting for your properties the right way. Um, like I work with real estate investors, like I said, who might be on QuickBooks but don't add their properties into QuickBooks, or don't use a holdings account with 30 plus properties. It's just a matter of what the needs are.
Is the ultimate goal profitability?
So for me, it's I always want to end with spend management, because my ultimate goal is to decrease spend, which and essentially increases profitability. And yes, you want to be profitable, and but cash flow is more important.
Yeah,
Um,
there's a lot to the story, I think, because there's a lot of numbers, people throw around, margin and, net profit and, um, kind of a operational cost and cost of goods sold and revenue. And so there's a lot of things there. Now, I think at the top of it all, obviously, sits profit, because obviously, as an owner, if you're running a business, you want it to be profitable. Otherwise, why would you start it? Because again, we're that sort of society that essentially measures everything by money, which, whether you like it or not, that's a fact, right? Because that you have a family and you have children and everybody wants to do their thing, and so you need the money to do all those things, and so the money has to come from somewhere. And so as a business owner, you have, or as an individual, doesn't necessarily mean business owner, you have a whole variety of choices how to spend your life in order to maximize the amount of money, in order to maximize the quality of your life, right? I think kind of zooming out even further beyond it. And so a lot of people start businesses because they don't want to work for anybody. They want to, manage their own time, and they feel that running a business basically will give them the most bang for the buck. But that's not necessarily the case. There are plenty of people I know who make a ton more money in corporate and working jobs than running their own businesses, especially if that business is ran as a job. Because even though you run a business, doesn't necessarily mean you run an actual business. It just means you are your own boss, but you still work a job that's dependent on you as the owner, especially if you're an operator. So, there's a whole variety of categorizations out there. Now, if you run a business that's an actual business and not a job, let's say you're doing landscaping or roofing and you're or HVAC and you're like the only guy doing the service, you don't have a business, you have a job, because as soon as you're gone, that business is done, right? As a business owner, you want to create, I think, something that transcends your time in the business. So if you leave, the business still works while you sleep, essentially. So that's kind of, to me, that's what a business looks like, or that's what it's supposed to look like. If I'm spending all of my time doing that, I want to make sure that I get the maximum benefits out of it. And the maximum benefit is generally measured in money taken out, right? They say, what does capitalism say? The sole purpose of a business is to make money. And so whether you agree with that or not, I think that's kind of a fact. Now, there's multiple ways to get there. There's one way is to make more, the other way is to spend less, the other way is to balance the two so that they accumulate into something that's fluid enough that allows you the lifestyle you want without showing any profit, so you pay less taxes. And I think that's kind of where you come in as an accountant, to jumble all those numbers in a way, or justify those numbers in a way that tie back into how you want to operate a business like that. Is that a good assessment or analysis?
Yeah. So
I know there's a lot there.
yeah, I mean, I'm always gonna say it depends. I had an economics professor in college who taught me this about finance and economics, and you can even say it depends on things like accounting. It really depends on the owner and the organization, because you will have people who look at profit, yes, if how profitable the business is, but they also want to look at cash flow, because profit just is a point in time, whereas cash flow is like how much money do you have sitting in the bank that you can use to buy your next whatever it is that you're trying to purchase. Like, you have to have that backbone of cash flow, because that measures how well you're performing, but also how well you can be performing, talking about past and future. So,
Mm-hmm.
yes, you want to look at profit. Absolutely. You want to look at all those things like revenue and your cost of goods sold and all your metrics that tell you how your business is performing and how well you're performing. But you also want to look at cash flow. And that's where spend management also comes in.
Okay, so cash flow is basically the money that is coming in that kind of sits around before it's spent. Is that right?
Yeah, so you have a cash flow statement that shows you how much money you have from operations, from finance.
Receivables.
Yeah. And then and then you decide, like, you want to reconcile it to the bank as well. You want to make sure that that's the money that you have sitting in the bank. And then, you have that opportunity to spend money to grow your business, whatever it is that you're trying to do.
Is that what people are trying to do? Grow the business? Because again, that's another metric in there is growth. It's like that's not necessarily tied to profit. It's kind of loosely tied to cash flow, but you can essentially grow the business without having any profit.
Yeah, you can with cash flow. Just having cash flow, you don't even need the profit and loss statement. Well, you do, but essentially, you can just look at your cash flow, look at your bank, and run your business that way. You don't need a accounting software to do it for you.
Yeah, you kind of have to figure out what's coming in, um, and just look at the bank, and then basically use that money before it goes to other things to invest in marketing and sales, essentially, right?
Yeah, but eventually you want to start categorizing things, like looking at different transactions, because if you're not going to remember everything that you're doing with that money, and you want to have a track record of like where you're putting that money, so you do eventually want to get into an accounting software.
Oh, for sure, not even a
Yeah.
question. And so that's part of kind of operating costs, because as a for example, for me, like product centric companies, we had obviously revenue coming in from sales, and then we had cost of goods sold, and so one minus the other equals your gross margins. But then you and then sometimes that looks healthy up until you start figuring out what does it take you to actually get that sale. And then so that's where your operation comes in, because you can be selling a ton, but then you start looking at a column of marketing or advertising, and all of a sudden all of that gross margin that you've accumulated basically goes to zero or sometimes negative. And so I think that's where you come in with the operational optimization and spend management and all of that stuff.
Yeah, so that makes perfect sense. Like, a lot of my job is like organizing and just putting things back in order, and I work a lot in QuickBooks, so I keep using QuickBooks as an example, but that's basically it, because, like, you put a transaction in the wrong place, QuickBooks might recognize it, but you might not, and you might not know that, and it might be sitting in a completely different spot, and it's like I spent $10,000 on a truck or something, I don't know, like, um, So like you want to know where your money's going and you want to have that track record of things. So QuickBooks does a great job with that. I mean, there's other softwares out there, but I just happen to work in QuickBooks.
Yeah, we used Zero before, XCRO. I think it's Australian QuickBooks alike. But yeah, I mean, whenever we did that, I essentially thought of it as kind of functional categories because, like you said, you can recognize the same transaction into multiple categories, and QuickBooks will allow you to do that. But from a finance perspective, not just accounting, you want to make sure that you're putting the right things in the right place that will help you make decisions. So, for example, sometimes meal meals and entertainment, restaurants and things like that would go into meals and entertainment line, and sometimes it would go into a trade show line, especially when that meal is had at a trade show, and I wouldn't have had that expense had I not gone to the trade show to begin with. You know what I'm saying?
Yeah, yeah. There's options into which ways of categorizing. I mean, if I had a full blown accounting team and I was going into a company and organizing their transactions, like we would be having multiple discussions about where to categorize everything. Even from like an audit perspective, when I did that audit with the CPA, I mean, we were going back and forth talking about what we were seeing multiple times a day, the same thing going over and
Mm.
over again, because you want to make sure that you categorize it the right way and that it makes sense from an accounting perspective.
Yeah, makes sense. Makes sense. Let's go back to kind of the higher end number side. One thing I want to talk about is raising capital, because a lot of times growth comes obviously at the uh, on the level of cash flow, but sometimes your desire for growth doesn't really equal with your cash flow, and so you have to bring that money from somewhere, whether that comes from you or family or institutions or investors. How do you kind of think about that?
Yeah, well, I'm glad you asked that. I actually work with a lender, a private lender, who we provide cash or cash flow loans to business owners. So not just real estate investors who are buying properties. We do that as well. We work with real estate investors. We provide capital to real estate investors, but we also work with business owners who need like an SBA loan, a small business
Hmm.
loan, like for growth. Like maybe they need to lease a bigger space or buy a bigger space for their office. So I don't actually do the lending. I'm not the lender. I partner with a capital provider who does the lending. So if anybody needs capital or is a business owner and needs to raise capital for their business, feel free to reach out to me. And Fuzzy will have my contact information, hopefully. Yeah, thank you. And that's what we do. That's basically what we do. His name is Nathan. Nathan Henry. He owns a capital raising company here in Chicago. And that's what we do. Like if investors or business owners need capital, we help them raise capital.
What are the benefits of maybe going to somebody like that who's an institutional investor versus maybe asking your family for money? Because I know family is typically the first place people go to, a lot of times. I don't like doing that.
No, it's a headache to go to family. I think you have to cross that bridge eventually, like in business ownership, where you have to raise capital. For a long time, I struggled to raise capital because I didn't have all the right credentials when I started my business, and I really was ready to throw in the towel on capital raising and my business altogether because I thought I wasn't going to survive. But if you're a business owner, you have to raise capital. Um, Eventually, you have to learn how to work with the banks and lenders to develop those relationships to raise capital for your business. because not only does it give you that flow of cash, but it also develops those relationships that you need to continue to grow your business. And as you're growing your business and you're paying down your capital, you're also like propping up your business to a higher level because you're doing that as you're doing that. So I think, part of business ownership is raising capital, and you have to do it. Eventually you have to. Yeah.
How do you think about the risks of raising capital and going into credit versus maybe bootstrapping and growing slower? Because, I can probably argue either side of that depending on, my incentives.
Yeah, you can. I'm more conservative, so I would be like the bootstrap and grow slower. Take the money and use it for something and grow slower. But I mean, I also had a moment where I raised capital and spent a lot of that money towards my business marketing,
Hmm.
like quickly right away. And seeing that money leave my bank was like, like
It's painful for sure.
yeah, so I mean, it depends on what your end goal is.
Yeah, I think it also depends on the situation because for us, for example, in the packaging company, we got a large corporate order, large corporate contract that required us to pay our vendors, obviously, like probably 90 to 120 days terms before we were going to get the money. And so that allowed us to justify a credit line. And so we ended up opening a credit line and basically taking money out and going into credit, knowing that we have that money coming in like, you know, 6 months, 8 months, something like that. And then we eventually paid it all off and closed it. But that allowed us the growth in the company that we wouldn't have otherwise because we didn't have that kind of money to purchase the product essentially.
Absolutely. I think at some point when your business is kind of stagnant and you need the money to grow your business for marketing or whatever it is that you're doing, that's definitely one way of doing it. And raising capital is part of business ownership.
Does economics play any role in that? When you make that kind of risk one way or risk the other way, because there's obviously you as the business owner and your abilities and your competence, and then there's like third party factors, or as people call the acts of God, you know, and so there's a lot of things that you're not in control of. I remember I used to listen to this podcast, How I Build This, I think, or something along those lines. And the guy used to always ask all those business owners he interviewed, is it skill or luck? And I think the right answer is both. It's kind of nature and nurture, right? So there's the you who's the competent business owner who's growing the business, and there's like the wind of the politics or the wind of the economy or um, the general sentiment of the public based on high interest rates. And so, like, how do you balance that out between the two? And how do you think about it from that perspective, especially on the accounting and finance side?
Yeah, I can speak to the economics side too of things because I follow that. And absolutely, I think it makes a major difference when it comes to borrowing money because interest rates happen to be a lot higher, for example, now. And if you're a business owner who, like any business owner who tries to save money and be a little bit more um, conservative with money, why do you want to pay out that extra interest at the end of your loan when you don't have to, when you can go like borrow from your mom and dad if they give you the money, right?
If big
So I
if
think it's just a matter of like we're all adults here now, and like you're not going to borrow that big sum lump of money from your uncle. And if you are, great, congratulations, more power to you. Some people start businesses that way. They go to their uncle or aunt or whatever and take a large sum of money and start a business. but the reality is that most companies just talking in the United States don't have that privilege, and they will borrow money from a bank or another capital provider, a lender, whatever else. And they will, as much as they might not like the interest rate, they will still borrow money. I mean, look at real estate investors every single day who sign deals.
Mm-hmm.
They sign deals with higher interest rate on mortgage too, and they
And it's not a
don't.
problem, right?
Yeah, they probably mind it, but it's just a part. It's like a hurdle that they have to overcome because they just have to do it.
Is general public fear playing a role in that? The politics and the economy are always dictating to some degree how well a business does, especially um, especially kind of in a consumer goods uh, spending space, or special luxury goods. What does that have to do with the way fear essentially drives the economy?
Well, I think emotions in general uh, can be a driver for the economy and how we sustain certain things. Like if we had, during this time while interest rates were rising and prices were going up, if we had a big enough people run out into the streets and start screaming like, "Oh my god, bread and eggs are like $8
Right.
now." There is definitely, that could happen, I guess. Like, but you just see that people are more level-headed than that, because when it comes to economics, we study these things, and as much as we might not like them, we don't go out into the streets screaming over a loaf of bread. We find ways to purchase that loaf of bread. And that's what I think most of society, what they do is they overcome these challenges in economics, and they pursue their dreams of opening a business and raising capital and doing all these things, because despite the fear and despite all of these natural causes of like higher prices and whatever else that could be keeping you from doing the things that you want to do, you know, humans are more susceptible to overcoming um, these certain types of hurdles, and they go on to live in society.
Until it rebounds.
And it could. And like that's my biggest fear is like having like a bunch of people screaming outside like, "Oh my god, bread is like $10." But you see that at the grocery store where you come up to eggs. I mean, you must have heard one or two people say something about, the egg prices when they were like $8.
Yeah.
So, it's just a circle, right? It's like we keep going around in this one circle, and prices are not going to calm down. Like, we're going into a recession with higher prices. Like, I don't see where there's going to be a budge in prices.
So you feel we are going into a recession, huh? I think a lot of people feel that way too. Either we're already in it or we're kind of heading towards it.
Yeah, I do. I think
Yeah,
so.
yeah, and I think that's where kind of a lot of the consumer fear comes from, because if we are going into recession, and Warren Buffett is basically pulling out all of his cash out, um, then as a regular person working a regular job, or even running a small business, then I'm going to be a little bearish on the spending.
Yes. So that's where spend management is really important, right? Because when you talk about big companies, multi-million dollar companies, can you imagine how much money? I mean, yes, you can. You own a company like that. How much money you spend a day on supplies and shipping and whatever else that you guys are doing, and and stuff like that.
Yeah, it's weird how it's like almost a vicious circle, because if I am afraid to have too much inventory, I'm gonna produce less of it. That's gonna slightly drive my cost of goods uh, up, and that means I'm gonna have to raise my prices, especially with the tariffs looming, assuming I produce in Asia somewhere or one of those tariff rich countries. And so then everybody else is going to start looking at the cost of my products, and they're going to say, oh my God, not only do I pay $8 for the eggs, I also pay double the price now for all these other things. But it's kind of the reason they're not buying those things is the reason that the prices are going up to begin with. So it's almost like one's dependent on the other, and people are failing to realize that.
Yeah, absolutely. I think, it's a big driver, like the economy and what's going on in the economy is a big driver for a lot of small businesses as well, as far as like supply and demand and like pricing and leveraging even their cost structures and things like that on how they're manufacturing goods, for example, and stuff like that. So it is a vicious circle. That's what I did. Little circle. It is a vicious circle that it's just part of it, and I think we have to like just accept it.
Yeah, it's funny how it's all dependent on the mutual belief in the same story, because as soon as enough people stop believing in a story, the whole system crashes. You know, like I read a book a while ago. It was on marketing. It was like years ago. And the guy was talking about how, I think the book was called All Marketers Are Liars. And the lie is the story that we're essentially referring to, because as soon as people stop believing the lie, then marketing stops working. And so same thing kind of works on the economic side. As soon as essentially the lie or the story is no longer relevant or accepted, then the entire story crashes.
Yeah, and like you can't necessarily know who's coming up with those stories either. Like you can't like it's not a time to like blame, I guess, but like the economics works in supply and demand kind of conjecture, like when you were talking about that. And in that sense, like a lot of things that are happening in just not just in the United States, but in the world itself, because of economics and supply and demand of a lot of goods and services, like the prices are going up. So you can't, there's nothing that we can do about that because the suppliers are going to raise prices. So is the manufacturer, So I mean, it's one of those things that you can't really do much about it, but just
We're all
hope that
screwed
we're screwed. Yeah, we can
together. We're
say
all
that.
screwed together.
Yeah.
Yeah, I mean, it is what it is. It's funny just because it's like the tariffs, especially, are not helping. Obviously, whether there's, I'm sure there's a long term plan here, but kind of on a local level, a lot of those tariffs are being either absorbed by the manufacturers, but most of the time they're being absorbed by the middleman or kind of the US companies. And the problem with that, in my opinion, is because these companies, the small businesses especially, they say corporations are not people, but they are, because those corporations are run by people. And so, because I'm now, as the business owner, absorbing a lot of these costs in order to make my product still sellable, then my buying power as a consumer goes away too, because I'm both the business owner and the consumer, right, in the same market. And so that obviously has an impact on everybody.
Yeah, I think so. Is absolutely it does have an impact. Like so far, I think the tariffs though are on imported goods. So like I don't think we saw a tax increase on you know like um
Locally,
goods
you're
that
talking about,
here.
right? Yeah, locally, there's not no tax increases locally, but the majority of goods are coming from Asia, especially China. So it's like, a lot of small businesses, especially in the industries I come from, consumer products and promotional items, and pretty much anything that's $100 or less on a consumer product side is made in China, and so all those things are basically being affected. And so the owners of those businesses are eating a lot of those cost increases because the commitments between the customers that they sell to and retailers a lot of times, like Target's not gonna absorb the difference in pricing. And so customers that I used to sell packaging to, for example, that have contracts with Targets where my packaging is used for their products, they're not gonna absorb those. So I'm absorbing the difference between the cost of the original product and now the tariffed product. And so my consumer spending as a consumer that makes my money through the business is now diminished. And so it's like that's cycle again.
Yeah. I don't really know how like a lot of my clients feel about the tariffs or anything. I haven't talked to them about it, but I mean, I haven't felt anything about the tariffs on my end. Like I have a service business, so it's a little bit different.
Yeah, for sure. Yeah, I just know
Um,
that like a lot of, and especially if you're in the real estate market, I don't know if that has, tariffs are directly correlated with any problems in that space. I just know that
well,
a lot of consumer product businesses who import from China are definitely related or impacted by the tariffs. Like all the sentiment and all the Facebook groups I'm in, people are like freaking out.
yeah. Well, like for real estate, I would think things like lumber and like, they like the stuff that they build with, not necessarily like for maybe, so maybe for construction
Yeah, materials.
materials. Yeah. Yeah.
Yeah, yeah. Again, I'm sure it'll equal out over a long period of time. And it's like it is what it is. Going in the streets and screaming about it isn't going to help. Just tighten your belt, watch your consumer spending, and buy your $8 eggs, and things will at some point get better.
There you go. Yeah.
Yeah. On that, as people are kind of tightening up, I think a lot of them are going back to school and maybe learning a new profession or kind of increasing their credentials. I know you've done a lot of teaching too. Like you've last time we talked, you actually worked at a school. How was that? Being in a private sector versus a public sector.
Yeah. So I worked for a private school when you came in so graciously and did a presentation for us. Um, you were with what was the name
Pa-
of your company?
Paper tube.
Paper Tube. Yeah, I was thinking Pet Cube for some reason. I don't know why.
That's next
Uh,
venture.
so that was short lived. I'm still teaching. Like I do actually coaching now. So like I'll sit in with people who want to open up businesses and kind of root them on, help them with like getting a business plan together and things like that. But teaching I do part time during semesters when they need me, and I teach accounting and sometimes I've taught marketing, but mostly accounting and business classes. So it's great. I love working with sharp young minds, and it helps me freshen up on my speaking skills, and also on all of my accounting stuff that I might not use every day. So it's great.
This is an organization, or this is kind of just like you doing it with some people you know?
So it's a company called Computer Science Institute.
Oh, the one in
Um,
Skokie?
yeah,
Shit, they're still around. They've been around for like 30 years in the same spot.
yeah. They're Russian owned.
Yeah, yeah, yeah.
Not that it makes a difference, but uh, so I teach there right now. Yeah.
Oh, that's cool. Okay. So this is like pro
Yeah,
bono work essentially, like
yeah, yeah.
coaching and helping people
I mean,
out.
I
No,
get
I know, but
paid.
I know, but I'm saying it's not consulting work. It's kind of like actual coaching and teaching.
Yeah, yeah. And a couple of my students have called me and like asked me like, how do I do this? And, structure business and things like that. So I've been pretty involved with that too. Yeah.
And these are like people who don't own businesses yet who are trying to do it, or these are like business owners who are trying to improve their operation.
Both. So
Okay.
I've got a mixture of both. Trying to open a business, like a trucking business.
Mm,
How do
that's
we
a
do
horrible
that?
business to start now.
Yeah, yeah.
The
This
economics
was
are like not there anymore.
Yeah, yeah. But this was like months ago that she asked me about it. Just a number of different things. I mean, I have a lot of like very educated people in my classroom who just want to get certified in a different area of like accounting or whatever.
Hmm.
Um, but like lawyers and so it's a nice conversation to have. To lecture and conversation to have with students.
That's awesome. Anything else you
Yeah.
want to cover? I mean, we've been going for an hour.
No, I'm good. Thank you.
Last question is, give me a good book that you've read recently that you would recommend to people. And don't
Um,
say quick books for dummies. Can be
um,
fiction or nonfiction, up to you.
hold on. I'm gonna grab it right here. Okay. I probably shouldn't do that in a podcast, walk away like that,
It's still good.
huh? It's right here. It's called Carpet fucking Diem.
Gonna write it down. Who's it by?
I'll tell you in a second. Let's see if it's even a book. Um, oh, it's no, no, don't use that.
All
Wait,
right.
no. I can't think of a book right now.
That's fine.
You're gonna
We're
have to
gonna go
come back to
with
me.
that's fine. We're gonna go with quick books for dummies.
Yeah, that's a good one.
That's a good one. Um, all right. So since you don't have a book, I got a quick question on AI. AI is kind of replacing a lot of things out there. How do you feel about it having a tentacles into the accounting and finance world? Like, is it a threat? Is it a problem? Is it the opposite? Is it actually helping?
It's not a threat. I think it's actually helping because it standardizes a lot of the things that we already do, like as accountants, without having to actually do them.
Hmm.
So, like posting transactions is more, um, it's it's more automated. So we don't have to do it as accountants.
So it's essentially a tool. So then it's not a threat. It's more of a benefit.
Yeah.
Great. I think that's a great note to end on. Thank you very much. It's been a pleasure.
Thank you. Bye.
Alrighty. Goodbye.